Lesson, we're going to talk about hammers. I'm going to try and do once a week. I'm going to try and do a nice little lesson for you. We're going to talk about hammers in particular and shooting stars. And one of the things that, the importance of hammers and shooting stars. The first most important thing about hammers and shooting stars is you're seeing retracement. You're seeing that the market momentum to the downside, and by the end of the day, the buyers came in. And when you see these kind of wicks, shadows, whatever you want to call them, I call them wicks, some people call them shadows, some people call them lines, whatever you want to call them. When you see this is a sign that there's buyers out there, that there's reversals, that people are done selling, that you're seeing support. And the same thing we saw here last week. This is a Doji. Okay, Doji is basically where you come down to, you make lows. Remember, in a candle, this is the high, this is the low, the body. Okay, this is the body, this is the body. When it's blue, that means it started here on the day and it closed here on the day. So in this candle right here, the high was up here at the top of the wick, the bottom was the low of the wick, the bottom of the body was the open, and the top of the body is the close. It's the opposite for a red candle. So again, when you get this situation where you have the low, you have the high, the low, but the body, the open and close basically at the same time, at the same spot, that's called a doji. And when you have a little bit of fatness in the body, that's called a hammer. Now to me, Steve Nissen has his own way. The bottom line, when I see something like this, I see reversal. The bottom line, when I see something like this, I see reversal. Just like up here on cable on the daily, when I see this, I see reversal to the downside. I happen to call this my propeller pattern, and this is where you come, you have the hammer, and you have the shooting star, all back to back. I call this the propeller pattern. And usually it goes whichever direction. You don't really know which direction it's going to go. Usually it is on line with the last candle, so the shooting star here. And again, look at the long wick, look at the body, right? So we started out, we were up, we were broken out, and we reversed, and we closed down. That is a reversal sign. And the same thing applies for the hammer and doji. Dojis can be on the upside and the downside. Okay, you can have a doji at the top, look, doji up here, shooting star doji, and we reverse. But notice, this is a great example. In this example right here, we never took out, I hope you can see this, we never took out the highs. And just like down here, we never took out the lows. So, when you could say, oh, hammer, I'm buying it, it's very difficult to say that because you really want to look at the shorter term chart, maybe by the pullback, but this is your line in the sand. This 93.60 level, wherever it was, that's your line in the sand. If you're trading off of hammers and shooting stars, for you to be short, if it takes out the highs, it takes out the highs up here, or it takes out the highs, that is not technically the right thing to do. You're gambling at that point because that is momentum. There'll be a lot of stops up there at that level. There'll be a lot of stops down here at this level. But you see shooting stars. When you look at and see for these patterns, that has to change your bias. In my opinion, shooting stars and hammers and dojis are the most high probability trades on a daily chart from a technical perspective that I've seen. When you get a clear hammer or a clear bullish engulfing, hammer, bearish engulfing. We'll talk about bullish and bearish engulfing next week on that. But right now we're going to focus on shooting stars and hammers. And when you have shooting stars and hammers, you've got to change your bias. You've got to be on lookout. Because again, it's usually oversold. Look how many days it went down. Yes, you had a doji here. Yes, you had a hammer here. But look, we took out these lows. That's a negative sign. Was this an outside candle? Absolutely. Outside bar means it took out previous day high, took out previous day low. That is a bullish scenario. But it never, never really took out the highs again. Now, I'm not saying the shooting stars and hammers are 100% probability trades. I just think they're more 75, 80, 90% trades. But the key is, again, not to chase. I mean, look at the New Zealand dollar. That was the most gorgeous shooting star hammer that we've seen in quite some time. We had never seen such a hammer that looked this good. This good. We were all over it on Thursday. If you listen to my radio show, we were all over that. And again, we took out bullish engulfing over 76.50. That's when you take out previous day high. Bullish. To the moon, Alice. So when you see a hammer formation like this, when you see a shooting star like this one up here, that's got to affect your bias, people. Must affect your bias. And again, you can scan the charts looking for these kind of formations, and they are high probability trades. So hammers, shooting star, doji, so crucial on the daily, 4-hour, hourly charts. Hopefully this helped you a little bit. Andrew Spanton, Global FX Radio, YouTube webinar editions on shooting stars, hammers, and dojis. Have a good week, people.